In this video, we are going to reveal the best savings account in Ireland for 2025, starting with the traditional options, AIB, Bank of Ireland and PTSB. With AIB, the two accounts of interest are the online regular saver and the personal fixed term deposit. The online regular saver currently offers 3% interest, which at face value looks good until you read the fine print. You can only deposit a maximum of €1,000 per month. Now, while this might be enough for many depositors, for those who are looking to earn a high rate of interest on a larger sum of money that they have today, it's of little value. But the biggest drawback of this account is that after 12 months, the portion of your deposit that's eligible for interest actually resets to the month one maximum balance of €1,000. In other words, if you deposited €1,000 every month until the end of 2025, you'd earn interest on the cumulative balance each month up to a maximum yearly balance of €12,000. But as soon as it hits January 2026, even though you've accumulated €12,000 over the course of the year, you'd only earn interest on €1,000 in January, €2,000 in February, etc., etc., not the total actual balance of the account. According to the terms and conditions, any excess balance over the maximum monthly threshold is only eligible for the standard saver rate, which is only 0.25%. If that sounds convoluted to you, you'd be right to think that way. And for that reason, this account isn't really worth considering. For the personal fixed term deposit accounts, AIB will offer you 3 different rates of interest depending on how long you choose to lock away your cash for. As this is a fixed term account, it's crucially important to remember that you cannot access your cash for the duration of the fixed term. While this sounds inflexible, the upside is that you get a guaranteed rate of interest from the bank, which can be attractive if you know with certainty that you won't need to access your cash for a period of time. Perhaps you're approaching or are in retirement with excess cash in the current account that you're looking to earn interest on. Maybe you're saving a lump sum for a future house deposit, a wedding, or another life event. Or maybe you have excess cash just sitting there that you want to put to work in a savings product. If that sounds familiar, it's definitely worthwhile sticking around until the end of the video because a fixed term account could be the answer for 2025. With these particular accounts from AIB, the minimum deposit is €15,000 with no maximum deposit. We'll pop these into a spreadsheet to compare them with the other fixed accounts offered by the Irish banks. Bank of Ireland offers a super saver as well as a gold saver and mortgage saver account. The super saver account is the most appropriate for us to analyze, as from what I can see, both the gold saver and mortgage saver accounts are just less attractive versions of the super saver. That said, the mortgage saver does offer bonus interest of €2,000, but the caveat is that you're committing to a Bank of Ireland mortgage, which may or may not be the best financial decision for you on the whole. With the super saver account, Bank of Ireland will offer you a fixed interest rate of 3% for 12 months, but without the caveat of not being able to access your cash. After 12 months, for account balances below €30,000, they offer a variable interest rate of 2%, and for any excess over €30,000, the rate drops to 0.5%. The maximum monthly deposit is €2,500. Compared to AIB's online regular saver, the super saver from Bank of Ireland offers Irish savers more options and can produce better outcomes. As was the case with AIB, Bank of Ireland also offers a range of fixed term accounts, this time with a minimum deposit of €5,000, and we'll place these into our spreadsheet for further analysis in just a moment. Lastly, PTSB have their online regular saver account, which offers a greater capacity for earning interest on larger balances than both AIB and Bank of Ireland, given that you can earn 2.5% interest on balances up to €50,000. However, there is a pretty strict caveat here, whereby if the balance in the account exceeds €50,000, even by a single cent, then the entire balance will only be eligible for interest at a laughable rate of 0.01%. So while this account is reasonably competitive, at least when compared to AIB and Bank of Ireland, Ireland, you need to make sure that you're not exceeding a balance of €50,000. PTSB offers 5 different fixed term accounts with durations ranging from 6 months to 60 months. By putting these into our spreadsheet, we can carry out a very simple analysis of the quality of the different fixed term accounts offered by the traditional Irish banks. For 6-month fixed terms, PTSB offers the most competitive account at 2% AER with a €5,000 minimum deposit. PTSB also claims the trophy for 1-year fixed terms at 2.75% AER with a €5,000 minimum deposit. Bank of Ireland edges out PTSB on the 18-month account with a more competitive AER at 2.98%, while 24, 36, and 60 months are all uncontested. However, when it comes to fixed term accounts, the offerings of the traditional Irish banks by and large fall short of the fixed term accounts made available by Raisin Bank, who are the sponsor of today's video. We can simply compare the best fixed term offerings of the Irish banks to that of Raisin Bank and organize by the fixed term duration to prove this point. For example, PTSB's 6-month account is bested by a 2.88% AER from Banca Privata Leasing. This account offers a better rate with accessibility that's on par with PTSB at a €5,000 minimum deposit and, importantly, no withholding tax, but more on that in just a second. Alternatively, A&G offers a 2.97% AER 6-month account with the caveat of a €20,000 minimum deposit for those with larger sums available. For 1-year duration, PTSB is bested by Izola Bank, offering 2.95% AER with a €1,000 minimum deposit. Opting for the accounts that have no withholding tax and or withholding tax that can be reduced to 0% when the difference in the AERs isn't that large can actually result in better outcomes from a cash flow timing perspective. Not having to suffer withholding tax means that 100% of your interest earned will be paid at the end of the fixed rate term, which can be more attractive than, say, receiving 90% of a slightly higher AER. This is especially true when the net cash received from an account with no withholding tax and a lower AER is greater than what's received from an account with withholding tax and a higher AER. Even though the withholding tax suffered could be available for offset against the Irish Deposit Interest Retention Tax or DIRT liability that will arise on the income, oftentimes the duration of the time between the receipt of the interest and the paying and filing of the Irish tax concerning that interest is long enough to render the higher AER to be of little actual value. This relates to both the time value of money as well as opportunity cost. The other significant benefit of Raisin Bank is that because Irish DIRT isn't deducted at source like it is with the Irish banks, Raisin Bank savers have a further cash flow advantage over Irish savers utilizing traditional Irish banks. This means that Irish savers will have 49% more interest at their disposal at the point of maturity on a like-for-like basis when comparing identical Raisin accounts and Irish bank accounts. Say a fixed term account generates €1,000 worth of gross interest. With the Irish banks, the saver would only receive €670 after DIRT at 33%. With the accounts on Raisin Bank, the saver would receive the full €1,000 upfront, which is 49% more interest at their disposal. The caveat is that the saver will have to personally account for the tax on the foreign income as part of their tax return, but they can at least avail of that extra cash in the interim period, say by reinvesting it. AIB's 2-year offering is bested by Haitong's 3.14% AER, with the withholding tax on this account being reduced to 0% when the required form is completed. PTSB's 3-year offering is also bested by Haitong at an AER of 3.1%, or even Klarna at 2.57% for those looking for a low minimum deposit of €500. Finally, PTSB's 5-year offering is outclassed by Ariel at a 2.9% AER with a €1,000 minimum deposit. Now you might be wondering, Dan, what about the 18-month term? I've saved this one until last because this is the outlier case where Bank of Ireland's offering is, as of recording, the most competitive by AER in this bracket. However, there's a much wider point to be aware of here. The Irish banks have been slow to reflect the downwards trend of European European Central Bank deposit rates in their own retail deposit rates, meaning it's likely that the Irish banks will soon start to lower their deposit rates to customers simply because their net interest margin, the thing that determines their profitability, may require them to do so. However, because Raisin Bank provides you with access to 23 different partner banks across Europe, you will always have much more choice than with the Irish banks. With choice oftentimes comes greater accessibility and greater value. Not only is one more likely to get the best bang for their buck, but they're more likely to simply find an offering that better suits their specific needs with Raisin Bank. All of this choice exists under one login, one platform, and for no fees. All managed easily through the Raisin Bank app or through the web browser. Plus, signing up to Raisin Bank is a significantly easier process than, say, signing up to a brand new account with AIB, Bank of Ireland, or PTSB as a first-time customer. But let's be real, none of this matters if you can't be confident that your money is in safe hands. With Raisin Bank, your money is fully protected and insured up to €100,000 per partner bank under the European Deposit Guarantee Scheme, and in turn, the national scheme applicable to the partner bank with whom you place your money via Raisin. This is the same European Deposit Guarantee Scheme which provides protection up to €100,000 on deposits held with the Irish banks under the Irish scheme. Put simply, with Raisin Bank, your money is fully protected up to €100,000 under European regulations, just as it is with AIB, Bank of Ireland, and PTSB. So when it comes to fixed term accounts, Raisin Bank has one of, if not the most competitive set of options for Irish savers for 2025. From a macroeconomic and monetary policy perspective, fixed term accounts in general are likely the best vehicle for Irish savers in 2025 who wish to save money for a known period of time and earn a competitive rate of interest. You see, we know three things to be true. Number one, the European Central Bank cut rates on 4 separate occasions in 2024, bringing the deposit facility to 3%. We know that many commentators agree that we need to reach between 2 and 2.5% in order to reach neutrality, i.e. the rate at which economic growth is neither stimulated nor restricted by monetary policy. Number two, the ECB president, Christine Lagarde, recently indicated that the ECB would introduce further rate cuts if Eurozone inflation continues towards the target rate of 2%, as restricting economic growth would no longer be necessary. And number three, while not gospel by any means, economists from Bank of Ireland see the ECB rate at 1.5% by September, with AMBN AMRO economists estimating the ECB deposit facility eventually reaching as low as 1%. So unlike when we were going into 2024 and looking at a sustained period of record high rates, now going into 2025, we're looking at what could very well be a period of declining rates towards neutrality. This doesn't bode well for the returns of Irish depositors, especially those with variable rate deposit accounts, hence why fixed term accounts are arguably an attractive option for Irish savers. However, the rates offered to customers on fixed term accounts are not immune to influence by falling ECB rates. The rate only becomes fixed for the customer once they commit cash to the account. So if an Irish saver wants to take advantage of the high fixed rates currently available on Raisin Bank, they must be proactive. Reason being, the next ECB monetary policy meeting, as of recording this video, is on January 30th, and there are many more meetings scheduled throughout 2025. It's likely that further rate cuts will come from these meetings, and when they do, the rates offered not only on Raisin Bank but everywhere likely won't be as competitive as they are today. So now is the time to consider making a deposit if one knows that they won't need the cash for a known period of time and they want to earn a competitive rate of interest. There's no doubt that variable rate options offered by the likes of Trade Republic and Trading 212 have been highly popular among Irish savers throughout 2023 and 2024. And while both of these options are still solid picks for those looking to earn high interest with instant access to their money in 2025, the point is that as ECB rates continue to fall, so too will the rates offered on these accounts. Opting for a fixed term account with Raisin Bank now is a way to guarantee the interest rate on the account for terms ranging from 3 months to 5 years. Plus, Raisin Bank also offers a suite of instant access accounts yielding AERs as high as 2.95% with zero withholding tax in the case of Nordax Bank. In fact, this account in particular would allow for a greater capacity to earn interest than, say, Trade Republic, given that the maximum balance is €85,000 compared to Trade Republic's €50,000. For the sake of completeness, it's worthwhile mentioning that accounts offered by neobanks such as Revolut, Bunk, and N26, while certainly competitive from a banking perspective, aren't as competitive as the likes of Raisin Bank, Trade Republic, and Trading 212 from an AER perspective. Not only because the rates tend not to be as good, but also because in many cases there's a requirement to pay a higher monthly price to unlock higher AERs. And even if you do pay the price, these AERs tend to not be market leading. Same goes for state savings products. They're just not as competitive when compared to the non-Irish alternatives. So with that being said, if you do want to try out Raisin Bank or any of the other platforms that were mentioned in this video for yourself, you can do so for free by clicking the links in the video description and in the pinned comment in the comment section. Using these links as opposed to downloading directly via the App Store supports me as a creator and lets me know that you found this video to be useful. Thanks again to Raisin Bank for sponsoring this video, and before you go, let me know what savings account or accounts are you planning on using in 2025. Leave a comment down below. Thanks very much for watching, and I'll see you in the next one.